Guys, let's talk about day trading strategies that are working in this current phase of the bear market. So the question I've been getting and I want to talk to you guys about right now is, what is the best day trading strategy in this bear market? Guys, I'm Kunal Desai. I'm the big boss at Bulls on Wall Street. Many of you guys have seen me making YouTube videos since 2010. I've been a full-time day trader since 2008. This year has been hectic for so many of you guys, and so I want to make sure that I give you some detailed strategies that are currently working that you can learn from and profit from them. So let's talk about a day trading strategy that I think is killing it right now in this current cycle of the bear market. I call this strategy the ATR Short. So for those of you guys that are not familiar with the term ATR, it means average true range. So the average true range is an indicator that tells you how much a stock is moving on average from its high to low of that particular day. So what it's essentially referring to is a candle size. So for my strategy, which is trading momentum stocks both up and down, I want to be participating in stocks that have a big ATR, a big average true range, because I believe that gives me the best shot to trade things back and forth, where you're able to kind of sashay in and out of names effectively in a big range. Because when you are trading stocks that are compressed with little to no range, the odds of you getting the meat of the move are very small. So there's a lot of good stocks out there that are liquid and tradable, but if the ATR on it is say $1 or even 50 cents, it's really hard, right, to be able to get kind of in and out when you're going for really the meat of that move. So how do I, first of all, use ATR on a chart on TC2000, which is my charting platform? ATR is just an indicator. If you go in on your easy scans and type in ATR, there'll be an indicator that comes up, and you can put it anywhere on your chart. You can add it into any one of these panes. What I actually do is turn it into a PCF scan, a number, so it's just displayed on my chart. So you can see, for example, on NVDA, the average true range on this is $7.78. If you look at Tesla, the ATR on this is $13.68. I use an ATR 10, which means it's the 10-day average of its true range. So what it's just taking is how much it's moved on average over the last 10 days, and it computes a number for you. A lot of people use 14 and 5 and 30. As short-term traders, really, I believe the price action of the last 2 weeks is the most important on a chart. I want to be trading names that have a big ATR in relation to its price, but also stocks that are liquid that allow me to get in and out easily. That kind of takes the universe of stocks that are really tradable on any given day into maybe 20 or 30, which in a bear market really simplifies your trading, because you can focus in on a handful of names that are all moving big, that have liquidity on them. And that's a little bit different than how you would trade in a bull market, where you have literally thousands of stocks moving up and down, and you have stocks with PRs and earnings, and there's so much happening that you have to do a little bit more in-depth research. But in bear markets, you want to keep things very, very simple. You want to trade with the trend. You want to focus on names that have big liquidity and big range, as they all tend to move together anyways. So let's talk about this setup that I call the ATR Short. In this bear market, we are really on the third, maybe even fourth wave of selling. So how you would trade the bear market in January or even February, March is vastly different than how you trade it now. What I mean by that is a lot of these stocks are down 70 to 80% off their all-time highs in November, December, January. Stocks like UPST were $400, now it's in its 20s. Affirm, $200, now in its 20s. Even these bigger names like NVIDIA was at one point $300, now you're sitting at $100. That big part of the momentum on the downside is over. So when a trend is fresh, you can chase down the shorts and you can day trade bear flags and all different types of setups as you have so much room to the downside. Now that the stocks have come down so much, chasing them down as you're in really month 12 of the bear market is not working as well as they did in January, February. Those setups still are there, but the probabilities of them working have started to decrease. It was a very high probability setup to short gap downs and things of that nature in January, February, March, even June. But now as these things have gotten so cheap and you're starting to see the news cycle start to change, the meat on the bone on the short side on that particular setup has dried up. So what we have been doing is shorting on strength. So what happens in a bear market is there is FOMO, there is belief, but what really happens is anytime a stock opens green or the market opens green, people get excited. They're like, this is the bounce. Here's the bounce. This is the big bounce we've been waiting for. And guys, we've been waiting for this bounce for weeks and weeks and weeks and weeks, right, mentally, but it never really comes. But what the ATR short does is takes advantage of shorting in a bear market, but most importantly, it takes advantage of all the FOMO that a little bit of green happens. So for example, today on NVIDIA opened strong and had a really big push from 120 all the way to 127.50. So it's used up $7.50 of range. Guys, the mood in the market at this particular time was fantastic. Everybody was celebrating, giving each other high fives. People are anticipating that a huge move is coming. But NVIDIA has an ATR of $7.78. So what ends up happening is as this is cruised up $7 and it starts to go sideways, your first inclination is to think this is a flag pattern. A flag pattern is a momentum strategy that works really well in bull markets. But in a bear market, most of the time, that pattern is a dud and it fails. So what happens is as you start to flag and you know that the ATR has been used up, what that typically means is the stock is going to come back down. In a bear market, it's a hunt for liquidity. When traders, institutions, mutual funds, they see something up a little bit, they start selling it as they've kind of reduced probably some of their losses and they start to sell. So what happens is as you start to see a particular name go sideways and you start to base out, you can take a short into this position when the 9 EMA starts to curl down and you put a stop at the top of the range and you short the flag. Now you don't want to short all the flags. Anytime you see a flag, you don't want to short it. But what you want to realize is that this stock moves on average $7 per day. It has already moved $7. It has no range left. And so what you'll see on these type of names is they will flood all the way back down into the lows half the time. And you've seen this quite a bit. If you look at these candles on NVIDIA, see these wicks over here. These are days where the stock popped up huge and then completely rolled over. And that's happening a lot in a lot of tech names. You'll see like these big pops, they go sideways for a little bit. Traders start thinking bull flag, and then the short comes in. Let's take a look at AMD. So AMD has a $3.88 ATR. So what you can see here is as the stock opened from about $57 and a couple pennies and runs all the way to $60.25, right? You've used up $3 of ATR. So as this stock starts to go sideways and traders are thinking consolidation, bullishness, we finally got some green, the 9 EMA will start to curl down And as it starts to do that, you want to take a trade as it starts to break under with the stop under, and now you can play this thing back to the downside. Even if you missed the original short, you can start shorting into the lower highs or using an assortment of setups that we learned in our bootcamp class, which is the VWAP sizzle, VWAP tapbacks, and you can do bear flags and so on and so forth. I teach 10 different day trading strategies in my 60-day bootcamp. So when you miss the first one, there's usually a secondary one and also a third one. But this ATR strategy has been working like a charm. Remember, in bear markets, strength gets faded off till that cycle starts to break, all right? We've been taught in bear markets to chase the momentum down, but frankly, we're just running out of room. We're almost in month 12 of the bear market. The tech stock started to roll over in November of last year. We're nearing a 1-year anniversary of all that. So the meat has dried up on the bone. So if a stock spikes down and you're shorting it, oftentimes they do work if you have a picture perfect trading pattern, but they weren't working like January when the ATRs on all these stocks were like $10, $15, $20. Now they're $3, $4 as the stocks have gotten so cheap. So the strategies that you use have to change. One of the reasons that new traders have stunk so bad in this market, and a lot of professional traders that I've worked with, talked with, met at conferences, is that people don't change strategies depending on market cycles. There are 4 different market cycles. You have your run-up phase, your rundown phase, distribution cycle, and accumulation cycle. Each one of these cycles requires a different trading strategy. And even in this rundown phase, which is your bear market cycle, because we've gone on for so long, it's almost month 12 of this bear cycle, even within that cycle, you have to make small changes to the trading strategy to what's currently working in the market, but also the cycle within the cycle. Guys, I teach all of this in my 60-day trading bootcamp. I teach classes live, 4 nights a week, from A to Z on everything I know about not just day trading, but swing trading. It's an interactive class with homework, quizzes, the works. I work with my students one-on-one in a mentorship capacity. It is my life's passion. Guys, if you have any questions on this video or this strategy, leave me a comment or send me an email at Kunal, K-U-N-A-L, at bullson.ws. Man, I look forward to hearing from you guys, and smash that like button if you're liking these videos. I'm going to keep them coming. Take care.